Hey guys, it's Ken Perry with the weekly update for you. It is August 24th, 2011. I spent the entire day doing an NMLS webinar for 8 hours, so it actually worked out really well. Kind of a cool technology. We can see the students, they can see us. Pretty cool class to be teaching, and that was for NMLS CE. So I've been talking to a camera all day long, so I'm going to try and keep this brief, but we do have a few updates for this week. So number one, biggest update that came out over the last week that I can think of would be the FHA update that the loan limits are coming down. If you've been watching our videos for any period of time, the maximum limit coming down from the 700 to the 600. And obviously it's only in the 600s for those that are high cost areas. So the benefit of this change is that it could have been way worse. Because we knew they'd be coming down, our concern was going to be that they would come down to actual regular limits. They get rid of all the high cost areas. They didn't do that. Instead, they kept it up in the 600s. So for those of you in California, other high cost areas, you guys get to keep your 600s. Everybody else either didn't adjust or adjusted down just a little bit. So anyway, if you want to find your loan limit out, go to Google, type in FHA loan limits 2011. You might want to throw in October 1st there because that's when it all kicks in. But that's the biggest update I can think of for this week. Now, other updates, the Consumer Financial Protection Bureau is in power. However, they're not doing much. The Senate is looking at, and the House is looking at a nominee from President Obama, and that would be Cordray. The word on the street is he's not going to make it, but we'll see, what he does. In the meantime, his bureau is up and running. They are technically, they are functioning. And I guess the cool thing I can tell you is that they're way better than the other regulators as far as communication goes. So they are communicating with us. We can get questions answered, which has been really nice to see. Other updates, RESPA. We've seen some major enforcement this year under RESPA. I would say you should be expecting more enforcement under RESPA. So watch that. I'm guessing the bad guys are going down pretty quickly because enforcement is one of the biggest areas of emphasis for the Consumer Financial Protection Bureau now that they control RESPA. They also picked up the head of RESPA. So the Bureau has picked up pretty much everybody they need to be able to go after folks. Finally, values, obviously not so great. Next Tuesday, we get the Case-Shiller reports. There's going to be some housing stuff that will come out. One thing I will tell you is the drop in the Dow that we saw, those 2 days in a row that saw major Dow drops, were about the best thing that could have happened to housing. And not just because your interest rates dropped really low, but also because what I kept hearing people say is that we did not need housing to make a full recovery. So they were thinking we could recover without housing, and what we just found out is it's not the case. So any recovery that we're seeing without housing is an unsustainable recovery. The reason that matters to us is because when people start running for office in this next election year, they're going to be talking a lot about whatever's going to get them votes. If people are seeing housing drop over and over and over and seeing the Dow drop, they're going to be screaming for something housing related. So what we should see in the next election season is people coming out saying they want to loosen guidelines or they want to create special products to try and get people back onto the homeownership track. So we're going to have the legislative group going in our direction coming up this next session. In addition to that, we have a lot of people that are coming in who were foreclosed on 2-3 years ago, coming back into the housing market. So I see some pretty good indicators. At the same time, we have kind of a symbolic action here. We have an earthquake that just hit Washington, D.C. We have an earthquake that just hit Peru. We've got a tsunami, a hurricane that's over there on the East Coast that's about to hit. So, we have a lot of stuff that's actually symbolic of our actual current housing market, just major crashes, major earthquake, natural disaster type stuff. Here's what I want to leave you with today. All those natural disasters are hitting our business. I had the greatest talk with some guys who own a company over in Portland yesterday. We went out for happy hour and had a discussion about what's going on in the market. They could not figure out a way that they won't be successful this year. It was so refreshing to talk to people who cannot figure out a way that they're not going to be successful. Because a lot of people I talk to are like, yeah, this is all going to kill us. Look, we're all dealing with the same facts. We're all dealing with the same housing market. Therefore, there's no reason that with the right attitude, you can't actually make it through this on top. So here's my encouragement for this week. Again, hang out with people who have the attitude that they're going to make it through. And don't hang out with people who have the attitude that every single issue is going to shut them down. Anyway, that's your update for this week. We will catch you next week when we'll talk about the Case-Shiller and then updates that we have from now to then. Have a great week. Remember, we are available now on webinar, and we do all of our CE classes live, and then we've just submitted everything that we do online, so we can have that option for you at the end of the year. You guys have a great week. We'll talk to you next week.